Hi guys, compliments of the season, and I hope most of you guys are having a great time and you are studying on the charts, maybe once a day or maybe a couple of hours a day. Of course, it's the time to rest, but it's also a good time to be checking up on the markets, learning more, and learning new concepts and expanding your knowledge. It's not a case of just resting and then forget about the markets and all that. You have to be proactive by yourself. If you're stuck, if you're in the mentorship, you can always get hold of me. I've realized that most of the guys in the mentorship group, they're a bit quiet and reserved. I don't know. Or it's a case that people are now understanding most of the concept that I'm teaching them. But anyway, be that as it may, I wanted to talk to you guys a bit regarding the pound yen trade that I took last week before Christmas holiday. I took a short position on the British pound against the Japanese yen, and I'm gonna explain in detail why I came to the decision of shorting the market. And there's a student in the group, Jerome. We discussed this when you called me the other time, so this will be a good study note for you, because I did try to get a hold of you, but I think you were caught up. So yeah, I'm just gonna explain briefly. I don't want to take much of your time, guys. I'm gonna explain briefly why I came to the decision of shorting the pound against the yen. So starting with the monthly time frame, you can clearly see we've got this last up close candle, right, before we saw a down move the following 2 months. That last up close candle qualifies as our bearish order block. It qualifies as our bearish order block. So with that in mind, we can clearly see yen created a low here, right, after taking out the sell stops below these lows. Then we created another low, then consecutively we created another low here. So you can clearly see that market was in an uptrend. Yes, we had this correction here that happened in so we got December, November. We got this correction that happened in October and September, October, November, and December. We had this correction here, these two down close candles. That was basically probably a retracement to the downside, taking out more, accumulating more orders for the rally to the top. But now, once it rallied, where was price looking to what? To trade to? Where on the technical chart was the liquidity? Where on the technical chart was price bound to find resistance or sellers coming back into the market? So this is what I'm gonna highlight to you guys now. So now coming back to the chart, we clearly have our last up close candle here, right? So we got this candle here, which opened on 138.194. 138.194. That was the opening price of this last up close candle. So now we highlight its opening and its closing price, which is going to determine the what? The body of the candle, right? And this down close candle is a qualified bullish order block. So now you can clearly see where price is currently, where it traded to. It traded into our bearish order block. So I'm going to highlight it with the rectangle tool here, right? Then I'm going to mark the midpoint, right? The midpoint of the rectangle tool. Now the midpoint of the rectangle tool becomes our what? 50% mean threshold of the bearish order block, right? On a monthly, remember guys, we are on a monthly here. We are just highlighting these levels on our monthly time frame. So meaning that anytime you see price above the 50% mean threshold in this bearish order block, ideal trades will be to the downside. That's your hunting area for short trades on the lower time frames. As you can see, we had that rejection to the downside on the current month after taking out last month's high. And what was there above last month's high? There was buy stops, liquidity for market to drop to the downside. So once you have highlighted this criteria, already we've seen that market is moving into an uptrend, but it's bound to find some sellers in this range, right? Because whoever sold in September, they are going to try to fight with the buyers so that they can bring the market to the downside. So now I'm going to go on to a weekly time frame. Now on a weekly time frame, you can clearly see now how the range becomes more clearer, right? You can clearly see we've got our 50% here. This is our monthly level, right? Remember, that's our monthly 50% OB. So I'm gonna make my price more precise, right? Focusing mainly on this bearish order block, right? In this range, that's where my short position was. That's where I took the short position. I'm gonna show you the entries once I'm done with the explanation. So the current week has opened bearish and market has moved to the downside, and last week's price tested the weekly bearish order block, right? We can also highlight last week the weekly level. So this is our 50% mean threshold on the weekly. Okay, let me just highlight that guys quickly. And there we go. Just get rid of this. So I need to copy this guy here. Just bear with me guys, I just need to make the levels correct. I don't want to have the wrong titles. So this is our mean threshold weekly bearish order block, right? So that's where you'll be hunting for short trades if you're a day trader also, or if you're looking to go in and out of your position, because you can clearly see the supply and demand concept. A secular return to a level is going to provide a much better opportunity to short the market. So now once we've done that, meaning in this candle, in this range here, this shaded area, as of last week, you'd have been looking to be a what? A seller in that range. So I'm gonna now go onto a daily time frame. My entry point is right here. Last Thursday, which was the last trading day. That was 24 December. That's where my entry to the downside is. Let me just show you quickly by showing the trade levels. So this trade was taken on the 24th at 1:10, right? Just after European session was the mid session of the European session. So my entry to the downside was here, right, in our weekly bearish order block. So now the further we go to a lower time frame, right? Now we are on a daily. The further we go lower, right, you can clearly see price traded above this high here. See this high? $695. You see that high of 140,695. What's lying above there? We've got buy stops, right? What do buy stops provide in the market? They provide the liquidity for the big traders to trade lower, right? To pair their trades with those short entries to the downside. So once I saw this, right, this move to the downside, that was a clear spike into my bearish OB. Remember, you buy when everyone is selling and you're selling when everyone is buying. So when I saw this three candle formation here, I took my short position with the basis that this level is gonna hold, right? This is our weekly level. As you can see, my stop loss is way above my monthly bearish order block, of which I'm going to adjust it now to break even and trail my stop loss. So let me just zoom in a bit. So after market took out these buy stops above 140,695, so we're just gonna call it 140,700 institutional price point. I open my short position, so you can clearly see short position was taken around 1:10 on the 24th, right in here. So you can see this is 12, so you got 1 o'clock there. So 1:10 is here in this price range. So that's how I decided to take this short position with the 0.1 lot size, and currently the trade is up 129 pips, just a couple of $113. So that's how you should aim to trade. You should aim to trade in such a way that the levels that you take your trades on, the conditions that I teach you guys should be met. Don't just open a trade and say, okay, no, this is a sell, let me open a sell, without a qualifying criteria regarding your supply and demand. So be sure to make sure that the price point where your entry is approaching a bearish order block or a bullish order block. Or in this case, we have already seen that price has taken out the buy stops above 140.700, the level at which it broke to the downside is also a good area for you to hunt for short positions. You see, because the liquidity that they've created here, right, they would not spike through again that level. If they do, make sure your stop loss is way above your monthly bearish order block. That green candle on the monthly chart, you see, that big, you see here. So now what I'm gonna do is I'm just gonna break even on this trade so that I minimize my exposure, right? So I'm gonna readjust, since it's a holiday, I'm gonna readjust my SL to today's high. Yeah, though the market hasn't closed yet, but we are clearly quite strong bearish. Only fundamentals are going to take this thing high up. So now I've readjusted my SL and I'm gonna take a bit from the position. I'm gonna take a little bit from the position. I'm gonna take half of the position out, so that is 0.05. I'm gonna close that. You can see now there is my entry, and I've exited half of the position, meaning I've got a 0.05 left, and I've already banked half of the position. So now we're gonna see how far it drops, but this down close candle could be an ideal area for me to be looking for exiting the trade, because we would have filled this liquidity void to the downside. We also have a fair value gap here. You can clearly see we have a fair value gap, which I would expect price to fill to the downside before I start looking for exiting the position. Yes, I've got my take profit right on this last down candle here, which is a bullish order block, but this guy here in the middle of my range could also be a good target to take off a bit from the trade. So I hope you guys have understood the explanation of why I shorted the British pound and British pound against the Japanese yen. So yeah, if you haven't subscribed to the channel, just click subscribe. I'll be uploading more videos in the coming days. And if you haven't joined the mentorship and you want to join, you're welcome to. Just send me an inbox on Facebook, Instagram, Twitter, or through my website, and we can teach you how to trade using institutional supply and demand. It's quite easy, guys. It's not rocket science, but you just have to be committed and be ready to change the way you trade. So with that, I wish you guys good luck and happy trading.